5 signs you're ready to refinance your mortgage. Have you ever wondered if there's a way to lower your mortgage payments or shorten your loan term? Refinancing your mortgage can be a powerful financial move, potentially saving you thousands of dollars over the life of your loan. But timing is everything. Knowing when you're ready to refinance can make the difference between a smart decision and a costly mistake. In today's dynamic financial landscape, with shifting interest rates and economic conditions, understanding the signs of readiness is key to maximizing your benefits. In this article, we're diving into 5 clear signs that you're ready to refinance your mortgage. Backed by financial research and real-world patterns, these signs will help you assess your position and provide practical steps to move forward confidently. Stay with us, because you might be closer to unlocking significant savings than you think. Let's get started. Sign 1. Current interest rates are lower than your rate. The first sign you're ready to refinance is when current mortgage interest rates are significantly lower than the rate on your existing loan. A 2021 study from the Journal of Financial Economics found that refinancing when rates drop by at least 0.75% to 1% can yield substantial savings, especially on long-term loans. Lower rates reduce your monthly payments or shorten your loan term, boosting your financial flexibility. Consider 2 homeowners, Emma and Noah, with 30-year mortgages at 4.5%. Emma notices current rates have fallen to 3.25%. She refinances her $300,000 loan, saving $200 monthly and $72,000 over the loan's life. Noah, however, ignores the rate drop, assuming refinancing is too complex. He misses out on savings. Emma's attention to rates cuts her costs, while Noah's inaction leaves money on the table. If you're seeing lower rates, maybe you've checked sites like Bankrate and noticed a 1% plus gap from your current rate. You're showing this sign. To strengthen it, monitor rates weekly using tools like Freddie Mac's Rate Tracker or consult a mortgage broker. Calculate potential savings with an online refinance calculator, factoring in your loan balance and term. Ask yourself, are current rates lower than mine? That's a strong signal you're ready to refinance. Sign 2. Your credit score has improved significantly. The second sign you're ready to refinance is a significant improvement in your credit score since you took out your original mortgage. Research from the Consumer Financial Protection Bureau, 2020, shows that a higher credit score can qualify you for lower interest rates and better loan terms, as lenders view you as less risky. A boost of 50 to 100 points could unlock substantial savings. Picture 2 neighbors, Sophia and Liam, both with mortgages from 5 years ago when their credit scores were 650. Sophia has since paid off debt and raised her score to 750. She refinances, securing a rate 0.5% lower than her original, saving $150 monthly. Liam's score remains 650, and he assumes refinancing won't help. He misses out on better terms. Sophia's improved credit opens doors, while Liam's stagnation limits his options. If your credit score has climbed, maybe you've paid down credit cards or corrected errors on your report. You're showing this sign. To confirm it, check your score for free via platforms like Credit Karma or Experian. If it's up by 50+ points, get pre-qualified with lenders to see your rate options. If this resonates, comment number 2 below to let me know you're with me. And if you haven't subscribed, hit that subscribe button and turn on notifications for more insights. Has your credit score improved? That's a clear marker you're ready to refinance. Sign 3. You plan to stay in your home long term. The third sign you're ready to refinance is planning to stay in your home for the long term. A 2019 report from the Urban Institute found that refinancing makes the most financial sense when you remain in your home long enough to recoup closing costs, typically 2 to 5 years, depending on the loan. Staying long-term ensures you maximize savings from a lower rate or shorter term. Imagine 2 co-workers, Ava and Ethan, considering refinancing their $250,000 mortgages. Ava plans to live in her home for 10 more years. She refinances to a 15-year loan at a lower rate, saving $50,000 over time, with closing costs paid off in 3 years. Ethan, planning to move in 2 years, refinances but barely breaks even before selling. Ava's long-term plan yields savings, while Ethan's short stay diminishes his benefits. If you're committed to your home, maybe you love your neighborhood or see it as your forever home, you're showing this sign. To reinforce it, calculate your break-even point. Divide your estimated closing costs, e.g., $5,000, by your monthly savings, e.g., $200, To find the months needed, 25 in this case. Ensure you'll stay longer. Are you in for the long haul? That's a vital sign you're ready to refinance. Sign 4. You can afford closing costs. The fourth sign you're ready to refinance is having the financial ability to cover closing costs. Research from Freddie Mac, 2021, indicates that closing costs, typically 2 to 5% of the loan amount, are a key factor in refinancing decisions, as they impact the overall savings. Being able to pay these costs upfront or roll them into the loan without derailing your finances is crucial. Consider two homeowners, Chloe and Ryan, with $200,000 mortgages. Chloe has $6,000 saved to cover 3% closing costs, allowing her to refinance at a lower rate and save $100 monthly. Her savings outweigh the costs in 3 years. Ryan, with no savings, rolls costs into his loan, increasing his balance and negating savings for years. Chloe's financial readiness makes refinancing worthwhile, while Ryan's lack of funds reduces his benefits. If you've got funds for closing costs, maybe you've saved a few thousand or confirmed your lender allows rolling costs without harming terms, you're showing this sign. To prepare, estimate costs using a lender's loan estimate form, typically $4,000 to $10,000 for a $200,000 loan, and ensure you have cash or a plan. Check your budget to confirm affordability. Can you handle closing costs? That's a key indicator you're ready to refinance. Sign 5. Your income is stable or has increased. The fifth sign you're ready to refinance is having stable or increased income. A 2020 study from the Journal of Real Estate Finance and Economics found that lenders favor borrowers with consistent or growing income, as it signals repayment reliability, often leading to better loan terms. Stable income also ensures you can manage new mortgage payments comfortably. Picture two families, Grace and Owen, seeking to refinance. Grace's income has grown 20% since her last mortgage, thanks to a promotion. She qualifies for a lower rate, saving $180 monthly, and her stable job reassures lenders. Owen's freelance income fluctuates, and he struggles to prove reliability. Lenders offer him worse terms, reducing his savings. Grace's income strength boosts her refinancing success, while Owen's instability limits his. If your income is steady or growing, maybe you've held a stable job for years or earned a raise, you're showing this sign. To confirm readiness, gather pay stubs, tax returns, and bank statements to prove income stability to lenders. Ensure your debt-to-income ratio, monthly debt payments divided by income, is below 36% for optimal terms. If this hits home, comment number 5 below to let me know you're here. And if you're not subscribed, hit that bell for more tips. Is your income reliable or rising? That's the heart of refinancing readiness. Final thoughts. Take a moment to reflect on these 5 signs. Are current rates lower than yours? Has your credit score improved? Do you plan to stay long-term? Can you afford closing costs? And is your income stable or growing? If you're nodding along, you're ready to refinance your mortgage, a strategic move to save money, reduce your loan term, or achieve financial peace. Refinancing isn't about jumping at every rate dip. It's about making a calculated decision when the stars align. Strengthen these signs with small steps. Check rates today, pull your credit score, or calculate your break-even point. Start now, pick one action and commit to it. Your mortgage is a tool, and refinancing wisely can unlock a brighter financial future. Keep moving forward, because your savings are within reach.